ladies, gents, 27th of January 2020. We are approaching end of the US session here. We have not closed the gaps we've seen from the very early morning, and that's very interesting. So let's discuss what we have when it comes to the calendar tomorrow. Let's discuss the charts and let's have a check if we have some interesting setups. So without a further delay, let's jump straight into the charts and the calendar. Okay, so today is Monday 27th. We got the German IFO business climate. It was weaker than what market was expecting. A little bit of the shake when it comes to the euro, especially euro dollar. Nothing extraordinary, to be honest with you, with the rest. But, well, if you remember Friday close, right? When it comes to the indices, there was some kind of the gap when it comes to the daily open, right? It was some kind of a gap when it comes to the gold open, this time to the upside. It was gap down to the downside when it comes to the oil. It was also some kind of the gapping down when it comes to the yen crosses. Well, we are going to discuss all those stuffs right here, right now, trying to summarize the day. So let's start with the indices. Well, in my way of thinking, right, if I'm not mistaken, we had this huge gap down on S&P, right? We probably, because of the Fed, I truly believe we are going to close that gap, right? So that's my way of thinking. I truly believe Tuesday, tomorrow, we are going to close the gap, right? We might see then some kind of the pullback. And then Wednesday, don't forget Wednesday, we have FOMC. We might see some kind of the rally. And again, I do expect some kind of the broken trend line retest and then rejection to the downside. Well, guys, when it comes to the indices, I have to be frank with you. From the intraday perspective, it wasn't that bad, but I've been trying to trade indices, trying to position myself to the downside. And well, the truth is, they hit me very ugly, right? So, well, when we are talking about the indices, a little bit of the own research from your side is needed, right? Do your own research. Don't treat it as the financial advice. I've been hurt already by the rising indices when I've been trying to position myself to the downside. All right, so we know what is going on when it comes to the indices. So when we are talking about the US indices, we have to remember we do have Wednesday FOMC. So I do expect a little bit of the rally back, at least trying to close the gap, maybe a little bit higher, trying to trade this broken trend line, and then I do believe we are going to see the downside when it comes to the indices. All right, let's go and try to check what we have on a different front, right? Let's have a look what we have here when it comes to the crude oil. All right, that's the crude. I think that this move to the downside dictate what is going on right now. So some kind of the range is possible, right? So we're discussing the possibility of the long side and short side when we were testing this possible demand, right? So as you can see, the bearish view, bearish scenario, we are correct when it comes to the downside. Of course, if the bullish setup didn't work out, the thing related to the stops was in play. Looks like we might go lower and we might see the retest of the 50 again, and that's the psychological level, guys, right? So I wouldn't be surprised to see some kind of the bounce from 50 to trying to retest levels towards 55 and then move lower. If you remember, my target is much lower. I'm targeting 40, 38, 35, 32 on oil. That's how I see the things going on here. Now, let's move forward. Let's switch to the intraday FX market. All right. Okay. So let's talk a bit about the FX market. Now, great thing when it comes to the analysis or bearish analysis when it comes to the euro dollar, right? Spike to the upside based on the ECB, spike to the upside based on the European PMI, but that was spikes only, right, guys? Now, Wednesday, ECB day, we are discussing a bit about that, okay? So, well, I've been thinking that because of Italian regional election, we might see euro a little bit higher, and frankly, where euro was a little bit higher, but was quickly rejected by this IFO weak number. I've been thinking that we might try to hit post European PMI, or we might hit some supply related to the ECB. Looks like it's not going to happen. Looks like we are not going to see that levels. Well, so we have this a little bit right now downward channel, right? So levels related to the 1035, 1050 as a supply. I would be very careful when it comes to the FOMC later this week, mid Wednesday, right? Second part of the US session, as we might see some kind of a midweek reversal. But again, I think that somehow we are going to see this time of the price action towards the FOMC and then strong dollar to post FOMC. The thing is that I do not expect that the FOMC is going to be able to weaken the dollar, all right? The only currency cross where I see dollar to be weakened, right, is dollar yen. But it means that other yen related crosses are gonna be even weaker, right? I'm going to prepare tomorrow during the day. I'm going to prepare the yen crosses analysis. What is important when it comes to the dollar yen? Well, if you remember this 109.70, 109.50, right? That was some kind of the line in the sand when it comes to the dollar yen cross, right? Because, well, we broke through this level, right? And we were supposed to hold, but come on, we didn't, right? We moved straight back through that one. plus gap down when it comes to the weekly open. Okay, so that's some kind of the suggestion that we might see more trouble ahead when it comes to overall risk on sentiment. Okay, so well, we discussed the indices a little bit earlier, so yeah, I'm quite negative. And finally, because of the Bank of England later this week, right, it's going to be smart to try to walk through the cable. Okay, but here I do think, right, that we are trying to create some kind of the triangle, and let me show you what I'm talking about. Some kind of this triangle. So I do expect the pound to be weaker, right? We might see levels lower post Bank of England. We might see levels related to the half of the previous consolidation as low as this breakout level 2650, right? It could work well with this falling trend line over here, because it might be some kind of the retest kind of the thing. Short term, I'm bearish cable. Medium long term, I want to see the price action around 2650. I think if you are going to break that level, well, much lower levels are possible. If you are going to hold 2650, we might see rally back towards 130, 135, and the important thing here is going to be to watch what's the market expectation when it comes to the next Bank of England move. That's it from me. That was the late New York session update, market update. Hopefully we are going to be able to discuss some kind of the volatility tomorrow. Don't be trapped, guys, and see you tomorrow. Take care and goodbye.